Hey guys, good morning. Sam here. Monday morning, September 18th. I thought this would be a good time for us to do a review of Bitcoin. And I wanted to show you something that one of our members sent over this morning that I thought would be a good, just a perfect example of the importance of looking at alternate possibilities. If we're adapting Elliott Wave into our trading, and we're going to use it as a tool to help us identify trade opportunities. The reality of trading from the right edge of the market without the benefit of hindsight, where it always seems easy to see what happened, is that we have alternate possibilities, right? Remember that Elliott Wave is always a potential roadmap. It's always a possibility. But we have these characteristics, these tendencies, and some statistical probabilities that we can use to our advantage when we're analyzing where the market is most likely to go and where we can position ourselves for good risk-reward scenarios. So here's the chart that a member sent over this morning. Let me find this here. And this is a guy. This is a content creator and author on TradingView that's he's pretty popular. He's got a lot of followers, and I'm just presenting to you an alternate view. And it's worthwhile to look at this because you don't want to get locked into one particular view, because either consciously or subconsciously your ego is going to get attached to the idea that you are so smart that you have identified the likely path of the market, and you are going to trade with the conviction that you know that you're right. And that can lead to trading mistakes. That can lead to emotional trading, which is almost always likely to get you in trouble. So let's be methodical and analytical and statistical about how we approach the market. So here's an alternate view of what's happening in Bitcoin. Right? He's making the assumption or the proposal that we could very well be putting in an A, B, C of a larger correction. Now he's making this assumption based on some Elliott theory that is valid, right? So he's saying we've had a five-wave move down, we've had a three-wave correction into this little ABC. So we have on a smaller scale, we have our first A, our B, and now we have a five-wave sequence into a C, completing the A wave here you see in yellow, and now we're in the process of putting in a three-wave correction for the B, and we have some trend line resistance that we're likely to run into. So is that possible, right? Is this a potential alternate roadmap? Well, absolutely, it's possible, right? He hasn't. There's no invalidation of any of these counts. Theoretically, in terms of strict Elliott rule set, this is absolutely a possibility. So let's go look at the market, and again, my point here that the validity of having an alternate count, and often this is a good thing to do, to have your primary count, or what you think is happening, on one side, and the alternate count on the other side. So let's go to our primary first. This is what I see. This is how we've analyzed the market to this point, and we have now a scenario here where we can't be conclusive about where we're going next. We can look at the larger trend. We can look at the fact that we've had this five-wave sequence here that's very clear to see. We've started we are in the midst of an internal retracement, right? On two sides, right? So we have the internal retracement of this low to this high. And now we're in the process of an internal retracement from that high to this low, and then add to that the internal retracement from the B high here to the C. So where are we likely to go next? Well, if we consider what we can see here in the characteristic here. Now we're on this is a 12-hour chart on Bittrex. So looking here, so what's interesting? Well, the first thing that there is that we're just touching the midpoint of the channel. So that's we might get a little bit of a reaction there, but just drawing our basic fibs just on the internal high to low. Okay, well, what did we see? We came right up here and we got just a few dollars shy of the 50, ran into the prior support on that A low, and then we sell off. Right, and we could have very easily seen the market do this. Right, we hit the B, or pardon me, we hit the 50, we hit the swing low, providing that resistance, and now we're heading. Likely, that's a scenario that we could have surmised at that point, and not an unreasonable trade. I suppose I should reverse that. That we would be reacting to the 50, guaranteed. There's algos that were selling it there. We get some reaction to it. We move away from the 50, and that was the likely target. That's the likely target. Doesn't happen. At least not yet. It has not happened. So the market's too strong. So now we're moving higher. We're about to challenge the 618. And here's where we can get some additional clues and perhaps a tell that we're now starting some sort of impulsive move away from this swing low. But we cannot say with certainty that we have that yet. So you could certainly make the case that there's a valid sell here as we come up to the 618. You could make a case for a sell there as we hit the center line of the channel. We're at 618 of this internal retracement. We have not a bad risk reward. Not a bad. I mean, I wouldn't take this trade because of my bias to the long side. But if you were 100% objective, you could tighten that up and say, well, I'm really willing to take an 11-to-1 risk reward. Right? Certainly, you can make a valid argument for that case. If you want to give it a little more room, we take it on the other side of the 786. Still over 4-to-1. Not bad. If you get a big sell-off and we go to the negative 618, now you've got 6-to-1. 6-to-1. Perfectly valid scenario. If you keep Elliott out of it, a very valid swing trade. If you're looking at Elliott, well, you can't conclusively determine that we're in an impulsive move. Can't do it. So that's a very valid trade. Very valid trade. Right. So that trade or that potential scenario here that he's implying when he first printed this. So let's go a little bit forward. Right, so very possible scenario. So he may well have the right count, the correct roadmap. No way to know. No way to know yet. But let's continue to look a little bit more closely. The challenge we have here at this point is the fact that we don't have clear evidence of an impulsive move. All we can see so far is that we've had, on this larger time frame, we've had a three-wave move down, and we're putting in some sort of a three-wave, potentially a correction of that. So I'm going to take that off just so we don't clutter the chart too much. Take these off because we've gotten through them. So we don't know. There is a very real possibility that we are putting in what he's proposing, which would be the A, here comes the B, and we're going for a big C. Very, very possible scenario. Okay, if that were the case, where can we invalidate that? We can invalidate that, well, only ultimately if we take out the prior swing high, because wave B is unlikely. It could happen, but it's unlikely to take out that and then turn back down. Right. So staying with the probabilities, I would be less inclined to support that roadmap if we take out the 786. If we get a reaction here, which odds are we're going to get a reaction here at the 618, because algos will be defending there, those that were written to just blindly take the retracements and not include Elliott analysis into what they're doing, right? Algo is just going to sell that, or they're going to defend their first sell here right up to the 618. We get on the other side of that, and then they're likely to reverse. But this is still valid. Still valid. We can't exclude it as a possible scenario or as a possible roadmap for us. What we're looking for, if we go back to from the training that we did this weekend, and we look at wave 2 and wave 3 statistical probabilities. Well, we know that for a wave 2, or pardon me, for this correction here, which we are currently labeling as a wave 4, we went right to the 62, very deep. But we know that 15% of the time we can go beyond the 6.2, but the vast majority of the time we're going to be between the 50% and the well, let's call it the 23.6 or 24%. That's 75% of the retracement that we're likely to see on an internal retracement. So if we go back to our market, well, as we come up to this, we have to go down to a smaller time frame to start to analyze it and see if we can make any deductions about whether or not we are in a wave 4, right? So if I label this for you, and hopefully you're getting to the point where you can start doing this on your own. If this is our A, this is our B, then we're looking for a 5-wave sequence to complete the C. And now we're looking to start a new 5-wave sequence on the way down. So if we're going from the B and we give this a 1, a 2, can we squeeze out a 3, 4, 5? Yeah, we can. We can. I like to keep those off. Can we? Yeah. Yeah, but let's look at that. And I know the chart starts to get a little cluttered here. For our wave 4 in this scenario, it just barely wicked the 23.6, just barely. So coming back here, we know that 15% of the time that's a reasonable outcome. It's not the majority, but it's certainly a valid count. If that's the case, then we have a complete A, B, C, right? And now what we'd be looking for, let me get that last draw off. Well, if that's the case, then we're now looking for a 1, 2, and an impulsive 3. So I'm going to take this off just so we don't confuse. So if we're coming back the other direction, well, then we're looking for a 1 and a 2 and a 3, 4, 5. That's what we as bull, if we're in the bullish camp, are looking to see. So if we come back at this, and again, I'm just going to take some of this off so I don't clutter the chart too much so you can't follow along. That would be our 1, 2. Shallow. We don't make the 50 yet. Back here on our wave 2s. Where are they? Wave 2s. 12% are held within the 38%, the bulk between the 50 and the 60. But we can look at that and say, well, 62%, pardon me, 73 are there. So we've got 85% of the retracements of wave 2 are held between the 6.2 and the 3.8. This would be a strong market if we're only making the 38 on that retracement. That just implies a great amount of strength in the market, right? So that's impatient buyers front running the 50. So is this valid? Well, we know also from our wave analytics, or from our wave tendency and statistical probabilities, that the vast majority of wave 3s are going to travel beyond 100% of wave 1. And the majority of them, 75% of them, are going to fall between 162 and 175%. So again, just to declutter the chart. So if we look at our wave 1 to wave 2, where's our sweet spot? Right here. Right there. So along the way, here's the first point that we can expect if we are indeed in a wave 3. We're likely to come here. We may very well hit some resistance. We can look at this previous shelf. This previous shelf here. That's likely to be some stiff resistance, because the bears will be defending that, right? So that's where we were before we had the big fall. So we're likely to hit some resistance there. We might see a little squiggle, a little reaction. The stronger the market, if we see a pop through here, then next target and next most likely 272. But here's what we're looking for, which is up here back to new highs. We're back to new highs there. So again, we can't discount the potential that alternate count is right I mean, this is a tell if we break the 618 on the way back. This is a tell if we get beyond 100%. Here's the 786. These are all potential resistance points that we are looking for, and we can't quantify this until we get through those. Can't do it definitively. So if we're not in the market and we're looking for our next trade, where is our trade? Well, we really don't have one. We really don't have one until we get to this. Then we can say with confidence that we are no longer corrective, that we have a new impulsive wave, and where's our trade? Our trade is right here. That's the trade. So you're on your hands right now. It's tempting to want to buy that. It's tempting. It's tempting, right? So breakout traders say, "Oh, we've broken the swing high. Now we're moving." No, that's not the way to approach the market. Because if you're a breakout trader and you're trading it on a break of this high, well, where does the market prove you wrong? Well, you got to at the very least put your stop down here. Very least. But we don't have a new trade in Bitcoin on this larger time frame until we can identify a three wave here, because it's very possible that we are just putting in a correction of this larger move here. We can't be sure. Can't be sure. So we have to wait. We have to wait until we get this, and we can take with a statistical advantage that probability that we and look here. So, and I've just free drawn this, but if that were the case, just curiosity, if we get that, look at that. All right. So this prior shelf of resistance now becomes the support, and if we do hit this, the 161 and we come back down, there's our 38. There's our trade between 38 and the 50. Why is that our trade? To be consistent, let me get that in green. Why is that our trade? Because we know that in wave fours, again back to our training from this weekend, 75% of the time, 75% of the time, a wave 4 will retrace between 24 and 50% of the wave 3. 75% probability. That's all you can. That's the best you can hope for in the markets. Is those kind of probabilities and that kind of statistical advantage, and that pattern analysis. And it's not just the Elliott wave count. We have support and resistance here. We have prior resistance, which would become support. We have an external projection now making an internal retracement. So just as a straight Elliott count aside, we've just got an internal retracement. We're trying to buy it at the 50, looking for the negative 23. All right, oscillators. Now that's where they can help with timing. So where are we on this 4 hour, which is my preferred trading time? Well, we've got some more upside here. We got some more upside. So do we get all the way up there? There's just no way to know yet. So if you're looking for low risk, high probability trades, you're on the sidelines in Bitcoin. You're waiting. You're waiting till we get more validation of what's happening here, because the alternate count is still a very real possibility. Very real possibility. And that would be ugly. Right? Then we're retracing the entire move. Then we're retracing the entire thing. I mean, I've got to go. Then we've got a complete 5-wave sequence. I can't even get that. Can't even get that far back. If I go to that, then we're retracing the entire thing. That's the lowest low I can find. Where's our 50? Oh, here's we got a big window down here. Possible. There's the negative 23 if the 618 holds it. Big drop down into the high twos. All possible scenarios. Okay, I'll wrap it there. I'll be back with some other markets as soon as I can. Okay, guys.